Welcome everybody to the first evening Moving Home with Charlie live stream. I hope everyone's relaxed and happy. I've got myself, this is actually Guinness Zero, alcohol-free Guinness. It's not bad. So cheers to everyone. In this live stream, excuse me one second. In this live stream, I'm going to be trying to keep it lighthearted and entertaining, but also talking about the very serious prospects facing the property market. I've had so many private questions on Facebook, Twitter, Instagram, LinkedIn, and even YouTube as well. And we're streaming on all four of those channels: YouTube, Facebook, LinkedIn, and Twitter. We're streaming live on, and I'll upload this to Instagram when we finished. So many of you will probably have seen in the media today lots of reports about the property market falling, and it is. I want to explain some stuff that you're not going to hear anywhere else. First of all, what you read in the press about house prices is not what's happening now. It's really important to understand that. Okay, so the latest land registry figures that we have, June, and those figures, because at the moment it's an average 5-month time for conveyancing. In other words, the time between when you get a sale agreed when you're buying or selling a property and the actual completion. Okay, so 5 months. So the June figures published by the Land Registry were from deals that were agreed on average in January. Okay, so the figures you're seeing now that say June are not June. In real life, they were the deals that were agreed in January. So there is at least 5-month time lag, because those deals were agreed in January. Those properties had already been on the market before that. In reality, I think there are deals for everywhere from November last year through to probably March this year that were included in those June figures. Okay, so that's the first thing. The figures that you see in the newspapers from the Land Registry about house prices in terms of completed transaction prices are on average 5 months out of date. Okay, that's point number one. Point number two, asking prices. When you see a move in average asking prices, it's very misleading, because regionally that varies enormously, and depending what level of the property market. Are you below 250,000? Are you above? Are you above 500,000? They've all got different dynamics, both vertically in terms of price and also horizontally in terms of geography. Okay, so what you might see as a national average may not be happening in your local area. But I wouldn't be doing this video if I wasn't of the opinion that property prices now, in other words, deals being agreed today, are now being agreed at lower prices. So what do I know about this? I have worked with estate agents for 25 years. They've been my clients. I've got clients that range from very large corporate brands to one-man bands, and I'm in contact with many of them on a daily basis. And I hear what's happening at the coalface. But even though estate agents are my clients in many ways, what I'm saying, my opinion, does not necessarily reflect estate agents' opinion. And there's a reason for that. I have never been an estate agent. I have observed them at close quarters for a long time. And one of the things that I've noticed is, with very few exceptions, there is a complete denial amongst most, but not all, estate agents when market conditions start to get worse. And the advice they will give you, that things are okay and the prices aren't going to fall, is genuinely what they believe. They're not misleading you. That's what they actually believe, because their businesses rely on it as well. So they're going to say what's in the best interest of their business, not dishonestly, because that's what they believe. And I've got very dear friends and associates that have been for decades, with whom I disagree about what's happening in the market, because they only see it from their side. They see it from the transaction side. I am not someone who earns my living on a property transaction basis, so it doesn't affect me either way. So how far are property prices going to fall, and when? First of all, if you don't think they're going to fall at all, I would love you to tell me in the comments why you don't think property prices are going to fall, because there's a long list of metrics, which I'm not going to go into this video. I did it in the last video, all of which are going to make downward pressure on house prices real. It's already started. I'll cut straight to the chase. I think that the prices at which property sales are being agreed has already begun to drop. Okay, when you see June prices was a 7.8 increase, that's on this time last year. That doesn't mean June prices are higher than May's prices this year. Okay, so my information and my opinion is that prices that are being agreed now, June, July, August, that have not yet filtered through into exchange prices or anything, are already dropping slightly. They're already easing. I think that you're going to see, and I know this sounds quite drastic and dramatic, I think it is likely, but not definite, that we're going to see a 10% drop in prices. There will be regional variations, but roughly speaking, a 10% drop in prices being agreed this year, which you will not see reported until next year. Because if you are thinking about buying or selling, you want to know what price you're going to get today, right? If you're going to go and buy a house or sell a house today, what price are you going to get today? Well, there's no data on that anywhere. It doesn't exist. And that's the purpose of this live stream, is to try and share with you guys what is happening today at the coalface. Okay. So I think there are three stages: a 10% drop, a 20% drop, and a potentially 30% drop. And I'd like to ask anyone watching this, if anyone watching has never encountered the term negative equity before, let me know in the chat, in the live chat, please. I want to know whether people watching this video are familiar with negative equity or not, because it is something that bears discussion. Because the possibility of negative equity, which is a horrific situation if you find yourself in it, in my opinion, is now potentially possible next year. Okay. I'll come on to that later. I'll talk about negative equity and what to do to avoid it next year. Now, some of you watching this are going to be first-time buyers. Some of you watching this are going to be people who want to buy, but also have something to sell. So you're moving out of one to another. And some of you may be people who own a property and for whatever reason are considering selling it. Maybe you're moving away, maybe for financial reasons, maybe you want to just rent for a while. So those are the three categories: people who are buying only, people who are buying and selling, people who are selling only. And what's happening now is going to affect each of those three different groups differently. Okay. And I will talk about how each of those three groups are going to be affected. First and foremost, how far will property prices fall and when? Recapping the timing, okay, so when you agree a price on your property sale, that won't get reported publicly for some 6 to 9 months, okay? I am now talking about prices being agreed today. I think prices have begun to drop, and I think that by the late autumn, you're going to be looking at deals being agreed at 10% below current prices. I think early next year, Q1 next year, that could slide further to 20%. So I'm saying that deals being agreed in March 2023, which is only 7 months from now, it's not that far away, right? Deals being agreed then are going to be being agreed potentially 20% lower than deals that are being agreed now or have just been agreed in July. And when you get price drops, they don't tend to go bang, splat, and then bounce up. In property markets, they tend to start falling off, then they get steeper, and then the drop price, and then they start to level out. Okay, and you don't get a bounce. It doesn't happen in property prices. It's much slower. I'll put a link in the comments to a study of previous price house price drops, and you can see for yourself. Okay, so there's the slight drop at the beginning, the steeper drop, and then the leveling out at the bottom, the third phase. And I think that there is the potential for us to see a drop of 30% from the high point that was which is deals being agreed in January this year. All right. So challenge me. Ask me if you disagree. Please let me know in the comments right now. Let me know. So why do I think this is going to be the case? I without going into too much boring detail, I think that the cost of living crisis and the effects of inflation and the effects on consumer confidence and mortgage lending are a long way away from where they're going to end up as a result of the cost of living crisis and inflation. Okay, so the consequences of cost of living on house prices and inflation on house prices, and the consequences of mortgage lenders having to recalibrate what they can lend on house prices is a long way away. And none of that is going to help prices go up anytime soon. Some of you might go, oh, but there's strong buyer demand. No, that's not true. Mathematically, it's not true. I'll come on to that later if you want me to. I had a fascinating conversation yesterday with an estate agent who has done the sums and worked out that a £400 a month increase in your bills equates to an £80,000 reduction in your borrowing capacity. Think about what that means. A £400 increase in your monthly bills equates to an 80 grand, in fact, it's at least 80 grand, 80 to £100,000 reduction in your borrowing capacity. That is huge because it means that mortgage lenders, ignoring what's happened to house prices, are going to have to, because I can promise you this, mortgage lenders are already calculating the effect of the cost of living and energy price increases onto affordability of buyers. Long before the buyers have done it. Most buyers have not yet fast forwarded to next year to work out what their disposable income is going to be after inflation, after food price rises and energy price rises, to work out their affordability. Okay, because what first-time buyers in the world ever aren't hugely optimistic? I mean, optimism is what it's all about, buying a first house. Okay, but unfortunately, that optimism needs to be tempered in these conditions with some realism, and lenders have got to be careful, because neither the lender nor you want to end up in the position where you're in negative equity. Let me cover negative equity briefly now. I think there is a chance that people who bought recently on a 90 or 95% mortgage, in other words, at the top, okay? So if you agreed a deal in January and bought a place on a 95% mortgage, I'm sorry, you're not going to like hearing this, and you want to sell your house in a year or two's time, if the prices come down as I suggest they're going to, you won't be able to sell your house, because the market value of your house will have fallen to below the money you borrowed to buy it. Okay? As long as you can afford to maintain your mortgage payments and you can ride it out, it's not a problem. It's typically a couple of years before you'll get back out of negative equity. It can be longer, but as long as you can afford to make your mortgage payments, the negative equity won't crystallize and bite you in the arse. If you can't afford to keep up your mortgage payments because of world events and whatever might happen, and your mortgage company then forces you out of your property to sell it, that's the worst nightmare. That is the worst case scenario for a buyer now. And if you are a first-time buyer now, you need to be very confident that after inflation and energy price rises have taken effect, you will still be able to afford your mortgage. Now, if you're choosing between 2 and 5 year fixed rate now, choose the 5-year fixed rate now. Don't take a 2-year fixed rate, take a 5-year fixed rate, so you've got certainty, because no one knows what's going to happen in interest rates 2 years from now. No one knows. Okay. And if they're going up and you can only just afford your mortgage payments on your 2-year fixed rate, which is always a discount, it's always an introductory discounted rate, you will not be able to afford the mortgage when you come out of your fixed rate period onto your variable rate, because it will jump up. And that's when people get bitten. And if you're thinking about buying, you need to be thinking 2 to 5 years ahead. And you need to be really confident that you're going to be able to service your mortgage payments to keep your home. Okay? Because I know people who got into the situation in the early 90s and they never recovered financially. They ended up living in a home they couldn't afford the mortgage payments. The value of the home was less than the mortgage amount they borrowed to buy it, and it was a noose around their neck. The ripple effects, consequences of it were horrific. You do not want to risk that. You do not want to risk that. I mean, I don't think there are many 95% mortgage products out there at all at the moment. If anyone knows differently, let me know. Why do I think prices might fall that far? Well, that's actually probably a topic for another whole in-depth video, because there are so many contributing factors to that, and so many variable factors. But all of those factors at the moment do not look like getting better anytime soon. There's a glimmer of hope that fuel, diesel and petrol prices have come down off their highs. That's great, but they're still 30-40% higher than they were. So they've spiked to come down a little bit, but that doesn't show any signs of coming down any further anytime soon. But other than that, there's no good news. And you need, in terms of the jobs market, that everyone goes, well, jobs market's really strong. It is really strong at the moment. That doesn't mean it's going to be this time next year. Okay. If you look up data on companies that are in financial distress now, the numbers are going up sharply. And there is a very strong probability at the moment that next year the jobs market will weaken again. And then this is what happened in the 70s really badly. It happened in the 90s, and it is at the moment the indicators suggest it's going to happen again. Nobody wants this, except, of course, if you are a first-time buyer that currently can continue renting or living with your parents or whatever, then this is great for you guys. This is great for you guys. If you are not in a hurry, a year from now, you're going to be able to afford something much nicer than you can right now, even if mortgage interest rates have gone up a little bit. I mean, there is a caveat, but nobody knows what's going to happen, because the whole banking system is under a lot of strain at the moment, and there's a lot of uncertainty about it. But if mortgage rates don't get crazy, then this is great news potentially for first-time buyers. So most of the questions I've had have been from first-time buyers asking, should I buy now or should I wait? And I answered that in the previous video. And in a nutshell, it's, if you need a home and you want a home, buy now on the condition you can afford your mortgage payments, so that you don't have to sell, and you can, because in the long run, you'll be fine, right? So if you need a home now, you want a home now, go out and buy a home now, because having a home is more important than saving money, provided you can afford the mortgage. If you are not in a hurry and you're comfortable where you are, then I'd be waiting. I'd be waiting at least 3 months, and then maybe till next year, because I think the steepest that steepest part of the drop is going to be the beginning of next year, if it happens. So I have had messages from people overseas saying they want to come back. They're moving back to the UK to buy. What's happening? Should they be viewing property? Yes or not? Let me wrap up this video with this. I haven't had any questions yet from you. If you want, but please do ask questions if you're sitting there thinking I'm talking. If you think I'm talking rubbish, tell me. Tell me why you think I'm talking rubbish. If you've got questions, please let me have the questions. Otherwise, I'll wrap it up with why I think this is what's going to happen. I am not a doom monger. I'm someone who believes in being prepared for the worst and hoping for the best. If you prepare for a property price downturn and it doesn't happen, you haven't lost. If you don't prepare for it and it does, you have lost. And that's why this is a conversation worth having. If you're a seller watching this, I said we talk about that, didn't I? If you're someone who needs to move out of one house and into another, well, there are two kinds. You can be upgrading or you can be downgrading. If you are trading up, proceed. There'll be slight variations where you are, but if you've got the finances in place to do that, you're relatively unaffected by what's happening if you're just trading up. And even more so if you're trading down, actually. But some people might, if you're brave, decide to sell your, if you're upgrading, sell your house now. I'll come on to that in a minute. This is the most important part, in fact. Rent somewhere for a while, wait for prices to fall for a year, and then buy your big house next year. Adventurous, but if it's a risk you're prepared to take, it might pay off. But if you are, and let's talk about serious situation now. If you're somebody who thinks that you may need to sell for financial reasons, let's say you bought your house 3 years ago, the prices have shot up, and actually you quite like to sell it now and cash in, crystallize your profits and take the money. Or you're someone who's genuinely worried you're not going to be able to afford your mortgage payments and you're wondering what to do about that. Or someone needs to sell for any other reason, then this is very serious advice that is completely impartial and objective and general from me. And you may not get this advice from estate agents because they do not think the market's going to get as bad as I do. If you need to sell the property, if you need to sell, if actually getting the transaction complete is a higher priority than the amount you receive, listen very carefully to this. Number one, find an estate agent who has operated in a market like this before. Do not go to younger, inexperienced estate agents who haven't survived a market downturn before, because they haven't experienced it, they don't know what it's like. So find some experience, okay? Go to those agents, and then when you find one that you trust, do as they suggest. Don't try and haggle a bit more money, because your priority is the transaction completing and you want it done quickly. And if it was me right now, I would be finding an agent and saying, I want to exchange contracts by Christmas. They're going to say, that's optimistic, and it is, but that doesn't mean it's impossible. And a really good experienced agent will help you. They'll say, look, if you want me to get you exchanged by Christmas, you're going to have to trust me on price, you're going to have to trust me on conveyances, and you're going to have to just work with me quickly, and we'll get this done, okay? Because a really good agent will have some ready buyers, and you will have to sell your property at less than asking prices. Do not look at Rightmove asking prices and think that that's what you're going to get for your house right now. Don't do that, right? That is a terrible mistake to make, because it will set your expectation at a place where you think, oh, great, we'll sell at this price. And then you'll wait and you won't get it. And while you're waiting, the market's moving away from you. And you start dropping your price a bit, it's too late. You'll be chasing the market down. That is the nightmare nobody wants. It's awful. So if you need to sell, do so swiftly. Be prepared to take a little bit less money than you'd like for the certainty of having your transaction completed. Give you an example. You might be someone who's got a 2-year mortgage fixed rate that's about to come to an end, and your mortgage payment might be about to go up substantially on top of your gas, electricity, fuel, and food bills going up. And you may have done your numbers and gone, can't do it. I am not going to be able to pay my mortgage. One of the most searched things on Google yesterday was, what happens if I can't pay my mortgage? So I know there are a lot of people out there thinking about this. And if you are thinking about selling in order to avoid the nightmare of not being able to pay your mortgage, that's a very wise thing to do. You need to get it sold quickly so that you can crystallize whatever equity you have built up. And I wouldn't panic. I wouldn't rush, but do not delay. Start talking to the most experienced agent in your town. By the way, when I say experienced, I don't just mean old and the ones who've been around the longest. You want to find the ones that are also forward thinking. Do not go with the crusty old farts. I'm sorry to say this. There are some wonderful old farts who are brilliant agents. Some of the best agents I know are the oldest farts, but they're still forward thinking, very dynamic, and very professional agents. But there are some who, like, I've been doing it for ages, but they're sticks in the mud, and I wouldn't trust them because they don't move with the times fast enough. Okay, so find someone that gives you real confidence that they're professional, they're up to date with the times, but they've got the experience and they've been through it before. And just suck it up, swallow the bitter pill. You're going to be getting less than you want for your property, even if you come to the market now. Now, even some of the best estate agents I know right now, I think, are smoking weed on property valuations, right? They're saying things like prices are still going up. Well, even if that is the case, it won't be for much longer. Not after the mainstream media's outburst today and yesterday and this week. It's just not going to. They are not going to keep going up at the mass market level. I mean, I'm talking about properties at and below average price, £300,000 and less. Above that, it's a whole different world. But for most people, you're talking about properties 150 to 200, 250,000. And this is where it really, really matters, where you do not want to get stuck in negative equity. So find an agent you trust that's not too old and crusty, but has been around long enough to have experienced a downturn. Trust them, do what they say, work with them. Make sure that your choice of conveyancer is also one that you know is going to get the job done quickly. Most conveyancers have got horrible backlogs. And they'll say, oh, it's about 3 months, when they mean it's 6. You need to find a conveyancer that's like, no, we can get this done quickly. Part of the skill of the agent that you use will be selecting a buyer that's not going to pull out on you, because one of the biggest challenges sellers are going to face in the coming weeks and months is buyers falling in love with a property, making an offer, having it bought, and then one or two things happening. Buyers get cold feet as market conditions get worse and the economy gets worse. And number 2, mortgage companies down value. And if transactions are taking a long time, the mortgage in principle that they had when they started out to buy your property has expired. And the mortgage company is going to say, sorry, the world's changed. We can't lend you that anymore. So if you need to sell, don't delay. If you don't know who to use, by the way, my website, please check out bestagent.co.uk. It's a completely impartial way of helping find the agents who are most confident in what they do. And just check it out. Does anybody listening to this have any questions about selling or needing to sell? If you do, please just put it in the comments right now. I'm only getting comments from LinkedIn at the moment. But otherwise, I'm going to leave it at there. I'll wrap up with, when will property prices crash? Okay, well, the crash isn't an overnight. It happens over the course of about a year, really. Okay, sometimes longer. And I think we're going to see a gradual decline. I mean, are the conditions there for house prices to fall off a cliff before the end of this year? Potentially, yes. But I think it's more likely to be the beginning of next year. I'll end on a happy note. As long as you can afford your mortgage, go ahead and buy, because after a couple of years, it will always, always, always come back. It'll always come back. Okay. So if you're making a long-term decision and you can afford what you're looking to buy, go ahead, because there's nothing better than being in a home. But if you're stretching yourself slightly to buy now and you're worried, it's not a good time. So, boys and girls, ladies and gentlemen, and any other genders that you identify as, thank you for watching, and best of luck. Send me, if you want to send me private questions, please follow me on Instagram, Moving Home with Charlie, or on Twitter, moving_Charlie. Please subscribe to my YouTube channel if you want. I will be doing updates as the news develops. I'll continue to do more and more updates on this, and answer more and more questions. And I'm very happy to answer your specific questions as well. Otherwise, thank you for watching. That's half an hour. I'm going to call that a day and finish my Guinness before it gets warm. Thank you, guys. Bye-bye. All the best.